All right, traders, today was the biggest red day of 2022 so far within the stock market. The SPY is down 4% on the day. Investors are continuing to get absolutely crushed. Just wait until you see how low SPY will be when Bitcoin sells off to $15,000 within the next 1 to 2 years. With that being said, for the traders who have not adapted to buy and put options at resistance to shorting stocks are getting destroyed as well. And my portfolio is sitting up 8.89% this year. All I've been doing in 2022 is using my simple gap trading strategies, mainly on the put side, playing the macro, even when I'm micro trading, not betting against the macro as we're in a macro bearish recession market. And it's been consistently working. And with that being said, I've been using some of those profits because I have a lot of cash sitting in my portfolio and I don't go all in, right? So what am I going to do with all this cash? I've been flipping that cash into leap put options, playing the macro side of the market. And the compounded returns have added up substantially. And I'm going to continue to do what works best for me within these current market conditions. With that being said, I'm going to teach you step by step how we're able to consistently profit within a bear market. It is possible if you adapt and if you change. So let's get right into the video analysis. We're going to be doing an in-depth price action analysis on the SPY, sharing with you my upcoming trades. We're going to be recapping my trades. I'm going to be sharing with you my upcoming trading opportunities. I'm also going to walk you through my new upcoming leap option play that I ended up taking a starting position on today. My last leap option play was on K-Stock, Kellogg's. It got absolutely destroyed today. This time I'm going to be patient and really stick with the trade, and it's going to be on this new stock I'll share with you towards the end of the video. So make sure you like the video and subscribe to the channel. Let's get right into it. So in terms of the SPY, let's just quickly recap what happened today. SPY had a gap down. Within the chat room, this is the update that I sent to members during the pre-market, right? So every single day I update the members when there's an important update within the pre-market. I also share my trades real time. I also trade live every single day at market open. So in terms of the watch list, if you go to the watch list section, you can clearly see right here, if we scroll really quick, this was the game plan. So the game plan was right here at 8:50 a.m. I'm very bearish for market open. There's a great chance stocks won't rip back up to the previous closing price. Some did, some didn't, but overall SPY got absolutely crushed. I'm willing to take starting positions at open on put options and scale into my positions on any rips towards the previous closing price. SPY should fill the gap at $400. This was sent when SPY was at 404. And then once it filled the gap, it quickly started to crash, react as a resistance. Then it came back down to fill the next gap, which was at 392. And then we also had the watch list with some great opportunities there. I played VERU from the watch list. I played the green to red move, made a 15% win. I'm 2 for 3 on the day. The portfolio is up almost 9%. We're going to recap the trades towards the end of this video, share with you what I did right, what I did wrong. Of course, I sold way too soon. This was the type of situation where you could have potentially quit your job or potentially even retired, depending on how much money you're putting into these contracts and if you held till close, because SPX puts are up over 2,000% on the day. It's absolutely insane. Literally, SPX put options were up over 2,000% on the day. Like if you were to get a $3,950 put, just look at how crazy these scaled today. These were at 35 cents in extended hours. At market open, these were at $1. They went all the way to $35. That's a 3,500% return. There were so many big hitters on earnings. Costco, we had, there's just so many of them. There were so many. Lowe's was another big one. Target was another big one. This also helped affect the crash of Kellogg's. And it's not luck, it's the chart. The chart is going to tell you when these things can occur. History repeats itself. Things are predictable, right? There's reasons why they say buy low, sell high. Kellogg's now has a dark blue triggered on the squeeze, and we have a gap to fill at $68. We are due for a micro spike. If some miracle occurs and this goes back to 73.44, I'm going to get back in on leap puts. Overall, within some time, I think we're going to rip back up a little bit for the micro heading into tomorrow. But within some time, we should be able to go to $68 to fill the gap. In terms of where we're at on this overall chart, it could be something like this. We got this red bearish candle. We got this red bearish candle. And then on the next day, it rips up a little bit. Then it starts to sell off more. I think that's where we can be at. If not, we're going to be on track to rip back up to 73.44, which will be the new best price to buy puts once again. That was where our initial entry was. So in terms of the SPY, the SPY filled the gap at $400. It failed to hold. So like I said, if SPY fails to hold $400 and it fails to turn into support, it is going to get crushed to go back down to fill the next gap that's waiting to fill below at 392. In terms of my day, I bought VERU put options at market open, and this made my portfolio go up 2%. It wasn't the biggest position size. I made a quick 15%, bought the puts right here, got squeezed on the double top, continued to hold the position. And then once it started to break down on the red, I did the same mistake I did on Roblox. I did not hold the position. I just got out as soon as it started to go red, and I didn't wait for confirmation to sell. In terms of confirmations to sell and really lock in gains, your next overall support level was at 1460s. When this goes red, your next support is at 1460s. There was really no green candles until like the 1480s, and it formed a dragonfly doji, some bullish trend reversal candlesticks here. So that's all your confirmations to sell in the 1470s, 1480s. I got out a little bit too soon. Overall, those puts went up over 100% on this dip right here. That was a good trade that I learned real time live on stream. And then I actually played. This is something I don't like doing, and this is something I want to bring awareness to. So if you are going to try to play the call side, if you are going to try to buy in current market conditions, you truly have to do it at the best price with a very strong confirmation. So if you're playing the long side, if you're playing calls, you should not be actively trading. You should be like these amazing, no-brainer, easy setups with strong confidence. They only come around like once or twice a week, the very rare setups. So in terms of my second trade was a small loss. So these are my real-time alerts. I bought the VERU put options right here at 9:38 a.m. And then I sold just 3 minutes later for a 19% win, actually on that 19% win. So I then played a call on SPY. So one thing, and I want to bring awareness to this because this is very important. I'd mentioned this as well within the watch list. This is very important. We're in a bearish market. I don't like trading against the macro. So the macro is more of like, in terms of a trader, you can think of the macro as like where the stock price is heading for the entire day. If you're going to hold it the entire day and try to aim for a big win, where the stock price is heading for the entire week or even months. Macro is more long-term. Micro is like quick scalping. You're in and out within seconds, minutes, or within like 30 minutes. That's like micro, super short-term. Macro is more of the entire day, a couple days, weeks, months, even years, right? So even when I'm micro trading, when I'm scalping, I don't like betting against the macro trend. Because when the macro kicks in, it kicks in hard, and the big wins are always in the macro. And, that macro can kick in on your micro trade, which can give you a big win or a big loss if you're betting against it. So I told members, I've been saying this since the beginning of this year, I don't like the idea of taking a short-term trade, even if I feel it's in my favor, but the macro is bearish, right? So what I'm saying is I don't like the idea of buying call options because we're in a bear market, right? Even if I feel like it's a micro short-term trade, I just don't like betting against the macro, period, right? So I tried to do it. And I explained to you, I'm micro trading. I'm mainly focused on puts at resistance using the gap close reversal to fill the gap below strategy. Try my best to avoid calls only at the best levels possible with strong bullish confirmations. Obviously, be sizing in a lot less on those. So I tried a call option. I tried one call today on SPY. It was a very quick, super quick in and out loss because I understand my risk and I know what it is that I'm doing, and I'm not going to go green to red on the day. So I took a call at 10:59 a.m. It was a safe call. It was a $400 strike, a May 20th expiration. So I had 2 days playing it safe. I didn't want to go with the same expiration. Didn't have much confidence in this trade initially. And I explained to people that I've sized in small to make sure I don't give back profit on the day if I lose, because my portfolio was up 2% on VERU. Last thing I want to do is go for green to red on the day. So I got stopped out. I quickly got stopped out, and you could see how fast I got stopped out. Within just 4 minutes, I got stopped out at 11:03 a.m. And it's a good thing I got stopped out, because those puts are down probably over 70% right now, right? And I understood the risk. So what I tried doing was I tried buying a call right here for the gap close reversal at the nice key whole round $400 level. And if SPY were to have a reversal at this level, it could have really started to pump back up to fill this gap. It had the price action, it had the volatility to do so. The problem was, you can see right here, we started to get a bullish confirmation, which is what I was buying into. I was buying into this bullish confirmation right here. The chart was looking micro bullish, but it failed to break above previous support, and it started reacting as resistance, which is bearish. So I told people, as soon as this cracks the low, I'm stopped out. I'm playing it safe. I'm cutting my L, because I know if SPY can't hold and have a gap close reversal at $400, it is going to get absolutely crushed and go back down to fill this gap below at 392. So are you understanding how my entries are literally my exits when I'm wrong? I'm trying to keep my exit as close as possible to my entry when I'm wrong, because if it can't have the reversal at the gap, then it's not going to have the reversal, right? So it's a gap close reversal strategy. If the reversal doesn't work out, I get stopped out very, very quick. So that brought my portfolio down. So I was up 2%. Then my portfolio dropped from being up 2% to up 1.5%. And then I started playing puts again. Once SPY cracked that, I was looking at stocks and I played CVX. This was a perfectly timed trade. I got in on CVX right here. So in terms of CVX, this was a leap option that turned into a day trade because it crashed so quickly. You can see right here in terms of CVX, I alerted this at 11:06 a.m., 11:05 on stream. So I bought the puts as soon as I got out of SPY. Why was that? Because SPY cracked the key $400 level, and there was a gap to fill below at 392, which is going to make stocks go down, which is very bearish for the overall market. So I picked up the puts on CVX right here at 11:05 a.m. The reason why I like this one and the reason why I went with this one was I was seeing this pattern where it had an all-time high fake out, and when it has this decent red day, right, it tends to close weak at the lows, tends to have a big red day, like it did here, like it did right here. There was a gap to fill at 167.87, and then there was another gap to fill at 164.71, using the gap close reversal to fill the gap below strategy. CVX ended up filling this gap right here at the previous closing price, rejected, formed lower highs, and then once I got that confirmation that SPY turned the key $400 level into resistance and no longer support, it's going to start to get crushed, right? And the reason why I didn't go with SPY puts is because SPY is low at micro support, while CVX is high at all-time highs at resistance, right? I like buying puts at resistance levels. So CVX had some micro support here at 171.30. As you could see, once SPY started to tank, it started to turn that low into resistance. And then you had the gravestone doji, which was my confirmation to get in along with the SPY confirmation. So I bought the puts right here, and 10 minutes later, this dropped $2 within 10 minutes. And I started locking in profits right on this dip. Just on this 1 minute candle alone, it went from 169.64 all the way to 168. The puts printed. I was up 20%. And then I started locking in profits at 15%. If I were to hold even longer, those would have been up. I mean, in terms of right here, they would have been up over 40% most likely. But then you could see it started to rip back. So that was the recap on CVX. And in terms of my new trade, I'm in on a new trade. It's HRB. This is a very similar setup to K-Stock. This is a very similar setup to K-Stock. So if we go back throughout the chart here, you can just visually see, we're extremely overbought on this stock. The highest gap, the best gap that's waiting to fill above. So for K, it was at like 75 almost. For HRB, it's at 76.89. But you could see there's a strong gap here as well at $33. So the key is it needs to crack 33. If it can't crack 33, we're going to be on track for a move within time to 36.89. Which I believe that's the absolute top. I don't see this going higher than $37. So I took a starting position on it. I'm currently sized in half of what I plan to do. It's extremely overbought. It's due for some sort of crash to about $30 would be the target on this. I'm playing it super safe, and I'm willing to pay a little bit more of a premium. The premiums aren't a big difference on this one between the June 17th and July 15th. And I took half of what I planned to do. This is a starting position, right? Once I gain more confidence and once I get more of the backside of the move and more bearish confirmations, I'll scale into the rest of my size. So I went with the July 15th expiration, and I did a $33 at the money, slightly out of the money strike. I'm in at $2 right now. They're at 205 to 220. So yeah, and I'm just holding these. We got the first red day, which is good. Is it a very strong bearish confirmation? Not really. It's not the best strong bearish confirmation. But we are really due for a pullback, and I have plenty of time on the puts. So just know, in terms of this trade, this is a leap option. This is something I'm holding. I mean, we all saw what happened with K, right? I don't want to get spooked out, right? It takes time. It takes time for these to sell off. If it's not going to crash, what is it going to do? It's going to consolidate, and it's going to go back and forth in a channel, and it's going to try to have some micro spikes, right? So once we get that strong backside of the move on confirmation, I'm going to be adding more into HRB. But the point is, within time, like K, these are going to crash. They're going to sell off. It's just a matter of time. So as long as you know what you're doing, you have enough time on the contracts, you're not going too far out of the money, you're giving yourself enough time on the expiration, you don't need this short-term price action to work against you. I had so many people talking shit about K that I bought leap puts on this because it started going up a little bit. I'm like, it's a leap option. These are things we hold. We try to hold these out. So I'm going to try to hold these out, be patient, scale into the rips, and then once we get the backside, even scale into more, possibly more than what I initially planned to do. So I'm not saying for the short term, this is the end. If I felt it was the end for the short term, I would be sized in 100% of what I plan to do, right? And that's not 100% of my account. I'm not taking massive sizes on these leaps. I'm taking like a decent size. It's not like a massive size that's going to truly affect it drastically. I'm using the profits that I'm flipping from the day trades, putting some of those profits into the leap options because I don't trade with my entire portfolio. That's why. So I have all this cash sitting. I have to do something with the cash to grow the cash. And that's where the leaps come in. So these are passive income plays where you can watch your portfolio grow. If we can see resistance form at 64.05, I'm going to be scaling into puts once we get some bearish candlesticks on the daily, once we get some lower highs. We need to start seeing in terms of the micro, again, it's a macro trade, but in terms of micro pullbacks, what we need is we need $34 to react as a resistance. If it starts breaking out, then we're going to see a retest of the 52-week highs. And just keep in mind, and this would be the true best level to buy leap put options, would be right here. All-time highs are 37.53, big downside potential. There's a gap to fill at 36.89, right? So, say the trade didn't work out. Say the trade doesn't work out at this gap right here, and there's a gap to fill 34.31. This is the reversal I'm playing at. It's not the best level. Then I could cut my loss quickly, or I can scale in. Like if it's not going to work here, it's going to work here. I'm sizing and I'm trading in a way, and I'm cutting my losses quickly to where the win rate doesn't matter. It doesn't matter if I'm wrong about this 2 times in a row. When it hits the 3rd time, I'll have bigger size and I'll make a bigger win because I cut my losses quickly. I just got to work on letting my wins run a little bit and having stronger conviction on certain setups. But that's my thoughts on this one. This HRB. So like I said, for micro, if we can get resistance in the 34s, I'll look to add. If we can start cracking 33.20, I'll look to add as well. In terms of day trading opportunities, the SPY is due for a micro rip. We're due for a micro rip on SPY, most likely midday tomorrow. So in terms of the SPY, for this to go bullish and for this to have a micro rip, we need to turn $392.34 into support. 392.34 to 391.86. That has to react as a support level. If it can react to support, start to break out, we're going to start to see a move to about $395. Do I believe SPY is going to have some sort of massive move up tomorrow? I really don't, but I do believe we're due for a micro spike. So I'm going to try to sway away from puts at the moment. I got to see. I'm going to be focused on stocks at resistance, not focused on SPY puts right now because we're at key breakdown. We're due for a little micro rip. If SPY can close decently strong tomorrow, I do believe we can gap up into Friday. I think that's possible. So we gotta see. We gotta see, man. Overall though, this macro is just so bearish. I'm just not interested in playing calls. I can really care less at this point about missing out on some sort of micro rally. If you were to just play puts and compound the count like we've been doing all year, I mean, your results would be exponential. Like if you understood how to trade the options, like locked in profits, like the results would be truly exponential. Like I'm getting to a point where it's just like the returns, like it's just like the YouTube videos and like the business. It's like it's not even worth the time in terms of the money I'm making compared to trading. It's just really not. But anyways, I love what I do and I enjoy it, so I'm just gonna keep doing it. But in terms of other situations, SPY I'm mainly on the back burner for. Bumble, I'm waiting to buy some Leap put options on Bumble. The highest I see this going to is 29.53. I think that's the absolute top. There's a gap to fill at 29.53. There's another gap at 28.05. High of day is at 27.80. It still hasn't filled these two gaps. This one is like, I don't think it's going to crash right away. I think we could see a little micro pullback, but overall it's going to be like a chop. It's going to be a chop like this, I think. And then once we see some bearish candles and a chop, I'll pick up the macro puts. Whenever Bumble chops up at the highs like this, chops up at the highs like this, chops up at the highs like this towards these gap fill levels, within time it sells off. So if you buy a Leap put option, in this situation, we'd be looking into something like a July 15th. This would be perfect. We're looking into a July 15th put option on a Bumble. The strike would be either 25 or 30. We have to wait. So I'm waiting for confirmations, man. I'm telling you, these are all seeds, man. These money seeds are going to print. Like HRB is going to print. K already printed. Bumble's going to print. We just got to wait for the confirmations, man. There's no rush. There's no rush to be buying Leaps. There's no rush, especially when we're due for some sort of micro bounce. There's really no rush. The chart's going to tell you if there's a rush. When Bumble crashes, before it crashes big, it chops at the highs for like a week straight, a week straight, a week straight. The chart of the stock is going to tell you what's going to occur. So there's no rush for Bumble yet. We got to wait on that one. We got to wait, right? But yeah, the beauty of Leaps too is we have plenty of time and there's no theta decay, man. It's just like the theta decay is so small. If you get something that's above 30 days, it just really doesn't affect you that much until it comes down to the wire, but we're not holding to the wire. So Coinbase is looking kind of bearish. We're due for a gap fill at 58.50 on Coinbase. I'm overall bearish on this one. We could see a micro reversal at 61.70. So I'm on the sidelines right now, just waiting for an opportunity to kind of short buy puts at resistance. It's just, you guys have to understand, man, the puts have just been so killer and so on fire. It's like they get to a point where the stocks are so low, you just got to wait for them to go back up to the best prices, for them to go back up to the gaps. So that's just kind of where I'm at as of now. But one stock that I'm beginning to become extremely bearish on is AMD. And it's at a key resistance. So AMD had very solid foundational support at $101 for quite some time, man, for several months. It finally cracked. It dropped all the way to 85, bottomed out, shot back up to that previous support, and you now have a bearish def candle reacting as a resistance level. You can visually see there was a gap to fill on AMD right here, which was a higher gap at that key previous support at 103.72. Once AMD stock filled the gap, it started to have a reversal to come back down to fill the gap below, which is that gap close reversal to fill the gap below strategy. My favorite strategy into 2022 that has led to my trading success. So with that being said, just by studying the reaction and just by studying how AMD stock reacts, to give you a perfect prime example, just look at how it reacted right here when there was a gap to fill above and it formed the same bearish candlestick. It started to sell off. So if we are red on AMD tomorrow, I will be interested in buying some put options. That's a trade I can see myself taking, so I'm saving the best for last. We're due for a micro pullback. We're due for a gap fill play to 94.24. If it cracks 94.24, it falls off a cliff and it's going to start to fill the gap at 87. Your make it or break it level, which I see it going down to tomorrow, is 94.24. Be on high alert for AMD. That's one of my new favorite setups that I'm seeing. And I saved the best setups till the end to truly reward those who actually watch these videos till the end. Affirm is looking pretty bearish as well. I'm kind of interested in this one. One thing I dislike about Affirm right now is, I mean, it's pretty decent. It's just a little choppy. It's starting to dry up a little bit. But overall, we're bearish and things are looking pretty bearish. You could see previous support right here is reacting as resistance. There was a gap to fill right here at 27.02. It had a gap close reversal today, came crashing back down. So the strategy worked once again. Notice how the strategy, the gap close reversal strategy, when the gap fills, stock has a reversal. Notice how it's working on the put side, but it's not working on the call side. We're in a bear market, guys. You got to adapt. You got to adjust. When we're in a bull market, guess what? We take a break on puts. We play on the call side, right? We play on the call side, gap close reversals. Same strategy, works both ways. But if you're in a bear market, you don't want to use a bullish strategy. It's just common sense. We're in a bear market, right? The micro call option gap close reversals haven't been working out. Does that mean the strategy doesn't work? No, it means we're in a bear market. So you adapt, you adjust, you don't bag hold like all these investors. You don't do the same thing over again that previously worked like traders do to lose money and get back all their gains. You adapt and you adjust. We're in a very bearish market right now. These prices are still very, very high in terms of the SPY, in terms of Bitcoin. The prices are still extremely high from a macro perspective, right? Do not bet against the macro, even if you're micro trading. Focus on micro resistance puts using the gap close reversal to fill the gap below strategy, right? So to give you a prime example, just watch all my videos. Watch all my videos till then. You'll see it's the same shit every single day, man. I get kind of tired of making them at times because it's the same thing over and over again. It's robotic. It's discipline. It's the same thing. It's consistency. It gets boring at times. And some people just give it all back because they get so bored of winning. They just get so bored of doing the same thing over and over again. But that's what it takes to be successful. And then to adapt as well. You have to be able to adapt. When we turn into a bull market, then we're going to start looking to play calls, right? Then we're going to start to be doing macro calls and micro calls. But right now, I'm mainly focused on putting my size where the puts are at the best levels. We just got to wait, right? There's going to be times where we have little micro reversals, but overall, we're macro bearish. So just wait for those best macro levels for the micro puts and for macro puts as well. Just wait for the best levels on the puts. But yeah, like AMD, this classic gap close reversal to fill the gap below strategy. That's a prime setup. We got to keep finding those, keep trading those. So this Affirm looks bearish. This support right here is reacting as resistance, right? You have this bearish def candlestick, and you could just see overall, it's going to get crushed. So I'm looking into some potential midterm puts on Affirm stock for a midterm swing. Just waiting for more of a confirmation. We could see a little micro move up. We could definitely see a little micro bounce, but overall, Affirm is done, guys. Affirm is on high alert to buy puts. AMD is on high alert to buy puts. HRB, I already bought the leaps. Waiting to add to those. We need more of a strong confirmation. So heading into tomorrow, heading into the rest of the week, AMD and Affirm are going to be my top watches for puts. If K has a miracle and spikes to 73, I'll buy puts again. Overall, within time, we're going to drop to 68 on this. We could see a micro spike just because everything's just so micro oversold at the moment. But overall, for the macro, we're going to continue to go lower. VERU is getting interesting, man. We're getting very interesting. If we can go red tomorrow, I'll play puts on VERU. This is another micro setup. So in terms of micro setups, I'm liking VERU. I'm liking AMD. I'm liking Affirm. Those are my favorite micro. My favorite leaps, Bumble. I'm waiting to buy some leap puts. HRB, I'm currently in on some leap puts. Affirm, I'm interested in some more midterm puts, just waiting for more of a confirmation. And yeah, that's mainly it. Yeah, that's mainly gonna be it, guys. So yeah, those are the best setups to trade at the best prices. We're going to be going more in-depth, more advanced into the written watch list tomorrow, and of course the pre-market live trading session. So the VIX, let's talk about the VIX. If you watch my videos, I explained to you guys how the VIX was due for a reversal when it fills this gap at 25.42. It partially filled it, had a reversal. There's now a gap to fill above at 31.77. I do believe we can start to see a micro reversal, a micro crash on the VIX, which will cause SPY to start to spike for the micro when VIX fills this gap at 31.77. That's my thoughts. That's my opinion on the current situation. So yeah, that's where we're currently at, guys. We're due for some sort of micro bounce, especially when VIX fills that gap. You can see SPY is already having a little micro rip. So that's where we're at, man. I shared with you my favorite setups. That's going to be it. And if you are interested in joining Trader Society, like I said, we trade both ways. We trade the best setups at the best prices. We cut our losses very, very quickly, right? We're trading these unique trend reversal strategies at the best prices at the best setups. We've been put option focused because things are macro bearish. So I've been waiting for the best opportunities to day trade micro puts. I've been flipping some of those profits into macro puts, which are money seeds that are making me money basically as I'm not even like watching the market. It's just literally making me money while I'm not even trading, right? Because I don't trade my entire account daily. I have cash sitting in, so I flip the profits into my leap put options because the market is macro bearish, and I'm doing it on the best setups at the best prices. If you've been studying the setups I've been trading, they've been at all-time highs. They've been at the best key resistance levels, right? Not all stocks have been crashing. Some have been ripping up like crazy, but the ones I've been going with have been getting absolutely demolished because I have this very specific criteria and I understand when stock prices are due for a crash. So that's what we're doing, man. That's what we're doing until this market flips, which is going to take quite some time. I'm telling you, it's going to be an ugly bear market. We're not even close to the bottom. Until the market flips, I'm going to be mainly interested in playing puts. I'm willing to do a call if we're at some unreal, insane, amazing gap close reversal price. I'm willing to try it out with a very tight stop and a small position size. I don't like betting against the macro, even when I'm in a micro trade, right? I don't bag hold trades. We get in, we get out. Trading's the best thing you can do, man. All these investors right now, they're giving it all back. They just gave back all of 2020 gains, which were life-changing gains if you secured the profits and sized in accordingly and got good entries. But if you're not locking in the profits, there goes the life-changing gains, right? Could have literally flipped those life-changing gains into your investments, then started trading. So with that being said, if you want to join, it's the first link in the description. This is going to show you how to trade both ways, how to trade a bull market, how to trade a bear market. And it's going to show you how to trade these unique gap trading strategies at the best prices. You'll understand how to create a trading plan, how to find and identify the best setups, how to trade the best setups at the best prices, how to trade both ways, how to trade price action, how to use confirmations, what reactions to look for, when to get in, when to get out. You'll understand everything it is I know about the markets. And I'm telling you, if you're watching these videos till the end, you will see I have this eye for the markets. It works. And I'm telling you, man, I can get you that eye. I can give you that opportunity. I can give you that third eye that I have, where you can be self-sufficient and learn how to do this on your own, where you're not blindly following me or anyone. You'll be extremely confident in your abilities. You'll be able to teach this to other people. You'll be able to show your friends, show your family, this stock's going to crash. This is where I'm at. You'll literally be able to do it. It's possible. I have students who are self-sufficient, do it on their own. I'm taking some of their trades as well. So with that being said, if you're looking to become a self-sufficient trader, within the video lesson library, you'll learn all the lessons about the gap trading strategies that I've created. You'll also learn risk management, position sizing, psychology, mindset trading. You also get access to the chat room. You get access to the Discord server. You can contact us via one-on-one direct message, add us as a friend on Discord. All the channels within Discord, my watch list, my stock analysis, I'll answer your questions, the real-time trade alerts, and then, of course, the most valuable thing, the live trading streams. Every single day, live at market open, you get to watch me trade live. You get to see me enter and exit my trades live. You get to see my portfolio. You get to see my charts. You get to hear the commentary, answer your questions. That's the most valuable asset. You also get access to the recordings of those live streams as well. There's a lot to it. I would encourage you to click the first link in the description if you're serious. Watch the video, read the entire page. If you feel like it's the right fit for you, sign up for the program as soon as you can. It's lifetime access for a limited time only. You'll be grandfathered in for a lifetime. at a one-time fee. It's only a one-time fee. It is not a recurring program. So with that being said, guys, I will see you tomorrow live at Market Open with the watch list and the live trading session.